Where is Palantir going? Can it make us rich or broke? What's the market's mood right now and what is the best approach going forward? Hello everyone, I hope that you had an amazing day and lots of profitable trades. In this video, we're going to talk about Palantir and see if it is the right stock for you. As we know, over the past few years, things haven't always been looking great in the job market. Companies once considered as safe havens for those seeking employment, or gainful employments in this case, have been reducing their workforce, and it's been a traumatizing experience for everyone concerned. At the same time, the rapidly rising inflation has been eating people's savings away in many parts of the world that have only known deflation for generations. When every assumption about the reality is getting blurry, we gotta seize that opportunity to work towards our own financial independence with as little reliance to the external factors as possible. One key factor to consider, or at least to improve our financial situation, is to find the next golden opportunity, the growth opportunity of tomorrow, and multiply our capital exponentially, increasing what's available for subsequent projects and investments. Essentially, we need to find the golden goose, and for many, Palantir is what we're looking for. Over the years, it has become so much more than just another tech stock collecting investors' money in exchange of empty promises of blue skies, or bluer skies still. It has grown into a major player in the sector that may tell us a lot about the market appetite for speculation. The company has enough influence, mystery, and prestige to move the market's curiosity and people's tendency to follow the trend. It is a company that people would often view equally as the risk appetite of the market, alongside others such as Tesla or Nvidia. Palantir's reactivity to the macroeconomic tidal waves makes it a very interesting company to analyze and to invest in. So we're going to take a deep dive in Palantir and to see whether it deserves to have a place in your portfolio. Before the video continues, I just want to take a moment to thank you for coming to my channel and hope that you will enjoy your stay and to come back for more content. If you like what you see, please consider to like, subscribe, and to check out my channel for playlists of companies I cover. With that being said, I hope you're going to enjoy today's video, and let's get started. Over the past few days, Palantir has finally managed to break through its previous tendencies and to clear the $25 level when I'm, writing today's video script, officially ending the current sell-off trend. So the previous level held at $21 has proven to be a very solid, support during the hesitation or the consolidation phase, while the market entered the beginning of a new round of potential bullish momentum that has been slowly accumulating in the price action over the past few days. Because so far, despite the absence of positive catalysts, the drift of summer trading volume, a lot of attempts to push the stock lower, the stock did not go below the $20 support, suggesting that this bottom might hold for the time being, while looking for consolidation. Some additional reasons include the upcoming rebalance of S&P 500, still some kind of doubts about its capacity to grow faster still with the public contracts. So these elements, I believe, have encouraged many shareholders to reduce their exposure and to assume that they can enter at a better entry point. Some may also believe that the short selling can be a good idea given the price action's pullbacks. Palantir is a stock that is made mostly of momentum and a huge dose of anticipation, instead of cash flows, sound financial decisions and results. The fact that its actual financial results are decent might be important, but not good enough to support its valuation. And it's not enough, even less so, to push it to even higher grounds. We can see that its widening scope has grabbed the market's attention far more than anything else. Previously, the resistance levels have been identified at 25, which we have to see for how long can the stock remain above it. And the support levels between 20 to 23 are plentiful and pretty choppy, so it's going to be a pretty difficult path downward if Palantir short sellers ever want to try that road ever again. So these are pretty important markers for investors because they would indicate potential areas of support and rebound for a continuation and even sometimes for reversals. Of course, in this case, the reversal is now no longer because it used to be $25, but 25, I believe, is going to be the new plateau before we consider the $30, assuming that the macroeconomic environments remain similar. The short-term trends for Palantir stock appears to be moving up. The previous decrease in both interest and volume from investors are now old stories. The overall trend stays bullish, and the short-term weakening momentum did not transform into like a larger market sell-off. Palantir is now experiencing what I would call a regain of strong bullish momentum while maintaining the overall trend as bullish either way, because it never really dipped too low. And it has managed to at least to maintain like a pretty high baseline so far. The short-term price movements would indicate that the sideways pattern with the slight downward tendency is now pretty much behind us. The stock used to face resistance at $25, and now I would say maybe start finding that level as a support, and even more support zones between $20 and $23. Investors should definitely monitor these as we go forward, because if they actually become support levels, like new support levels, then we're really looking at the $30 zone that's probably going to be crossed in a short to near-term future. On a fundamental level, Palantir Technologies has always gathered a lot of interest from people like us, so the retail investors, ever since it went IPO years ago. It's even one of the potential weaknesses for the company's long-term outlook, because the fact that institutional investors don't have the majority of the Palantir shareholding might be a sign that despite its very solid business model and reliable revenue streams, public sector, Palantir might be perceived as too expensive by the institutionals. This higher presence of retail investors also kind of explains why Palantir is known to be volatile, or more volatile than other large market caps. Ever since its debut in the secondary market, the sentiment has been overwhelmingly reactive, with investors eager to capitalize on all kinds of trends and momentums. The innovation or the maverick reputation of the company on the way up, the tech sell-off, the interest rates hike, and also the doubts about the company's relevance or the CEO's leadership style on the way down. Palantir's journey in the stock market has also been characterized by intermittent periods of bullish enthusiasm with prolonged sell-offs. And the dipping was, so bad at one point that it reached below $10 mark. One significant aspect of Palantir's price movement is the correlation between its fundamentals and the macroeconomic news cycles. Events like geopolitical uncertainties, supply chains issues for large economic sectors, and the interest rate decisions of governments around the world, as well as for, the attitude of regulatory bodies for narratives like AI, data, innovation in general, may have had a significant impact on the share price, while simultaneously being affected by the company's own news about the financial performance and the guidance pricing from analysts. The relevance of analyzing news, I would say, is limited, but it can be used as a reading tool for the current momentum to confirm whether the wind is really blowing in the same direction that you think it is blowing to. It's often observed that news surrounding the company closely reflects its price action or the price action of the recent past, leading to a self-fulfilling prophecy scenario when you're reading those pieces. When the stock is on an upward trajectory, we tend to see a lot of positive news, sometimes or very often written by ChatGPT. And this is going to increase the optimism that is already, existing. But on the other hand, when the stock goes downturn, then the negative news kind of amplify the selling pressure, accelerating the downward trend that once again already exists. This probably goes for most stocks that you might be interested in. The news articles may be interesting to confirm where is the wind currently blowing, but not where the future direction is probably going to be. As things currently stand, Palantir has been able to maintain its bullish trend in the medium and long term, with diminishing marginal increase over the past, over the recent past. The stock has been proven to be very resilient in the recent years, and the pace of its ascent has finally started to pick up once again, indicating yet another potential shift in sentiment amongst investors. Because, like we said before, Palantir doesn't just live off its own financial data, its own information. It's also something that kind of reflects on what is the current market mood about speculation, about equities, about technologies in general. One factor that may influence Palantir's future performance is the status as a large cap, because with the market cap that it has and also increasing, Palantir is poised to solidify its position amongst the market leaders. Large cap status often brings increased institutional interest and a broader investor base, both of which would contribute for further upside potentials. So despite the current bullish outlook, it's essential to exercise a lot of caution, because we got to remember that the higher it goes, the more fragile the Jenga tower gets, right? So once it gets to close to $30, it would be highly plausible that there's going to be some sort of big sell-off, just because people being people and a lot of bad bag holders being hanging around for quite some years, a lot of people would be, very impatient to take the profit now because they've been suffering losses for so long. So the market dynamics can change very rapidly, and unforeseen events may still derail any sort of burgeoning trends. So in terms of financial performances, I would say that it's one of Palantir's strong suits, but definitely not enough to maintain the current baseline for the company. It has already been through a period of massive sell-off back in 2022. The rock bottom could very well be sub 10. With that being said, it's definitely something to keep an eye on, because Palantir's financial reports are known to be with somewhat of influence around the market or in the investment communities over the past few quarters and years. The key levels or the key ratios I tend to look at are the cash levels, the gross margins, and the growth. Cash can tell us if the company can satisfy its immediate demands with its own operations instead of diluting the shareholders, and that could be a massive plus for those looking for more stability. Companies need capital to keep the lights on, and that tends to be a very important metric to determine if the stock should be bought or kept away from your portfolio because of fears of dilution. The cash positions have been stable and solid because of its gross margins, which is basically the difference between the amount of money that is brought in versus the amount of money that you need to spend in order to generate that business in the first place. Now, with that being said, given its symbolic and size-related significance, I would say that investing in Palantir definitely comes with its own opportunities and challenges for people looking to have some, to dip their toes in this particular industry. So one of the primary reasons why people wanna go into Palantir is for the growth potential. It's often positioned, or at least considered to be positioned by the market as a leading player in the data analytics sector. It operates in a field with a lot of promise for the future economy, regardless of the amount of controversies that it may have. As businesses increasingly rely on data-driven insights to inform the company decision makers about how to proceed next, companies like Palantir are very well positioned to capitalize on this increased demand. Its expertise are, pretty niche. Not everyone knows how to treat and analyze data, and it really stands out in that sense. Another thing is that Palantir's own financial stability is a reassuring factor for the investors. Unlike many other tech startups that operate at a loss, Palantir has already established a revenue-generating business model. This reduces the likelihood of share dilution through frequent fundraising rounds, providing investors with a sense of stability and confidence that this company is not going to mess around with your capital. It's not going to, it's not going to water down what you own in this company just because they cannot bring additional money without diluting those who were here before. Palantir has also demonstrated its capacity to capitalize on popular trends to generate significant interest from the market, especially amongst the retail traders. So Palantir has been able to increase or enhance its visibility and appeal, attracts attention from both individuals and institutional investors. This ability to capture the market sentiment and to leverage it to its own advantage further underscores Palantir's potential for growth and success in the long run. With that being said, there's also, risks and challenges that are unique to Palantir. One potential concern for investors is the possibility for legal problems with data ownership and privacy. Because the company deals with arguably sensitive information, it may face a lot of scrutinies and legal challenges which may adversely negatively affect its operations and reputation. Any negative developments in that area may significantly impact the investor sentiment and the company's financial performance. Another potential issue is its own reliance on the public sector for contracts, and also its own valuation, really. So the company, the government contracts can be pretty lucrative and they're also very stable. But if they decide to cut back on their spending, or if for reasons other than purely economical ones, they want to switch vendors, that's going to have a lot of impact and volatilities and negative volatilities for Palantir. Another potential downside is the possibility of narrative shift. Right now, AI is popular and arguably so is data. But years ago, EV was popular and so was fintech. So if the market begins to favor other sectors or technologies, just like it has shifted around over the years, it could dampen investors' enthusiasm for Palantir stock and lead to a decline to in its market value. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, given the current market dynamics and the Palantir's own stock performance, I would say that it's a good long-term investment to buy into its shares now. It has demonstrated that it can be a pretty resilient choice, even for tough times. So in good times, it's probably going to thrive. It has shown its ability to adapt and capitalize on new market narratives, which is very crucial in a rapidly evolving landscape. Its capacity to seize opportunities also suggests that it may continue to thrive and to generate more values over the long run. So the real question now is, should you buy Palantir given that it's going from 21 to 25? My position is that yes, you should. You should, and you should buy, let's say, 5 to 10% of your allocated amount that you previously have allocated into Palantir now. Because there's a real potential that Palantir is going to try to aim for 30 or even 35. And by then, I would say that it would be a good time to take profit and to see where it's going to go. Maybe to take additional profit by buying the stock when it's like retracing or having a small pullbacks and so on. So all these are valid strategies to be had. So like I said, in terms of entry point, the current timing might be a good place to start, and the exposure should be controlled at around 8 to 10% of your portfolio.